Good morning, traders. This is Painless with the Stock Strategy Circle. This morning is September 10th, and I'm going to take some time to go through our watch list and see if there's anything tradable this morning. Some of these positions we already have, but if anything has broken out this morning, I'll go ahead and issue a trade alert. And as a member of Stock Strategy Circle, you can get these trade alerts updated on your phone automatically through your phone app with even a link right into Trader's View where you could place the trade assuming you had an account that was linked up with them. And the software is fantastic. I sort the watch list based on float, so I want to be positioned mostly in low float stocks because low float stocks have the greatest potential to make massive moves. So I only trade the best companies that are out there by stock performance. So I'm already filtering for that. And so then to try and get the most potential for gain, I then sort them by float because stock price is based on supply and demand. If there's less supply and lots of demand, it stands to reason that you're looking at better moves. So I'm going to try and go through this relatively quickly. As of right now, there's 73 stocks on the watch list, and that changes depending on market conditions. But let's take a look what we have. My initial glance on this is that this is probably a little bearish, but we'll see. Let's move on. Limbach Holdings, I actually issued a trade alert for this already today. The symbol is LMB. On relatively low volume, it has peaked above its resistance level here. So this represents a relatively low risk entry point, probably with a stop loss down here around a 60 or so. Fair Isaac, we issued a trade alert on that one yesterday. Fair Isaac is a relatively expensive stock at $1,700 a share. But again, we're at a relatively low entry point here. Let's put our swings in. I have everything turned off because sometimes it's easier just to look at the charts clean. You can use your swing points to set up general entry places and stop loss places. Now, remember, these are going to be obvious for everyone in the market, so I don't typically leave stop loss orders hanging out there. That's a personal preference. I remember during the flash crash a few years ago, I got cleaned out, and then all of my stocks by the end of the day had rallied back up and made new highs. So I learned a valuable lesson there. Of course, there's no saying that in a massive market collapse, you wouldn't totally get wiped out, but probably not. I mean, let's face it, unless you're trading at 100% margin all the time, even if the stock market crashes by 50%, that's really going to suck. But if you're in high performing, good quality companies, they're likely going to recover. Anyway, so you'd look at placing your stop loss down around here. The buy entry point, I use a swing level of 3. And for the support, this is going to be 5 days. And so the reason I do that is I'm looking for quick pullbacks in order to enter positions in strong stocks as they make new highs. And then a lot of these stocks tend to be a little bit more volatile than the general market. And so because they're a little bit more volatile, I want to have a little bit more room for protection before I close the position out. And so on this one here, you can see it's actually penetrated and it closed below this. That's usually super bearish. But then what happened? The very next day, it recovered the high. And so really what this is looking at on Fair Isaac, FICO as the symbol, this is probably a spring. So that's why we issued a trade alert on it yesterday. We actually got back in this one before it broke through. Maybe that's a little too risky. We will find out. Time will tell. But this looks like a spring. And if it turns out not to be a spring, you don't have that much risk here anyway. If this thing starts to look weak or it starts to fail, we're just going to get out. We're not married to any of these stocks. We're just dating them. Castle Bioscience in a box. Cohen and Steers in a box. Nuvalent, we issued a trade alert on yesterday. It closed above its high. It's holding up today. This one here, even though the swing is all the way down here, likely if it breaks below 82, it's probably going to come all the way down to 73. Depends on your trading horizon and how you balance your account. Remember, all of the stocks on these watch lists are the #1 performing companies in the market. PAR Technologies sitting right at support right now. Axogen is still in its box. It's in kind of a high level consolidation here. It broke above the swing and it's been holding up. Today may turn out to be spring. This may be a test. We may issue a trade alert on this one. We'll have to come back to that and see. Granite Construction, this may turn out to actually be another quick shakeout. It's trying to recover, but old resistance has a tendency to become new support. Well, in this case, it broke through the old resistance, and now the old resistance is acting like old resistance. However, if you were to issue a trade on this one, from right here, you'd only be risking $2 a share. This is probably a good entry point. I'm not going to enter a trade alert on it, but it's probably a good entry point. That's Granite Construction, GVA. Mercado Libre, this thing has just been a monster for a long time, but as you can tell, it's very volatile. We are inside of a box right now, $2,000 a share. I'm not going to issue a trade alert on it, but again, we're at a good point where we just cleared the aisles, made a low. Jones Lang LaSalle, this may turn out to be a spring as well. PennyMac, we actually issued a trade alert on yesterday. PennyMac is inside of its box. PFSI, there's a box. What is so compelling about PennyMac is that it held up, right? Remember, old resistance becomes new support. It held up right through there. Came through, penetrated. Very next day, this is going to be today, it is back up again. The whole point of the stock strategy circle is that when these things happen, they happen. And even though if you have a watch list, if you're not alerted to when these things happen, you may end up missing a really good entry point. So what happens here is I have this linked actually to my account. So when I place a trade, as soon as the confirm comes, they send me an email. That email is then parsed. That information is put up on the website. And so then live, once my trade is filled, the website is updated. Now, if you have the app on your phone, you can set it so whenever the trade alert action happen, let me rephrase that, whenever the trade alert fills come in, it'll buzz your phone. You can open up the app, click the link, and it'll take you right to TradingView. And then you'll be able to see, exactly what I did. And then you can use that to learn more about the markets and, help you get better. Anyway, with PennyMac, if we get significant weakness here, we would probably sell if we get a close back below this, but it's looking pretty strong. First Advantage Corporation, we have a similar thing. The difference is it hasn't recovered as much. So with this one, we're going to wait for a high. Protagonist Therapeutics, we issued a trade alert on that one yesterday because it just recovered like a madman. It has made a new high. It looks like it wants to make another new high today. This is PTGX. Nice little consolidation here, and then it is taken off. World Connect Corp. Not sure what's going on here, right? We have the same dip because the market took a beating on Friday, but it's having trouble regaining those highs. Bright Horizons Family Solutions. We issued a trade alert on it a couple days ago. It is not holding up. I'm going to give this one another day. This is BFAM. But if it doesn't start showing some promise here, I'm probably going to close it out. Baldwin Insurance Group. Looks like it may find some support in here. Let's leave that one alone. UMH Properties. Look at this. New high, new high, new high, new high. Good solid support. And it is well above this area here. Let me show you something else that's worth looking at, but not always. I mean, it just kind of depends, right? Let's add in a price volume trend. So price volume trend is very similar to on balance volume in that it adds or subtracts the trading volume to a running total based on the stock's price activity for the day. And so what that helps you determine is whether or not a stock is under accumulation or distribution. There will be many times where a stock is just moving sideways And when you look at the chart, it's very hard to tell, is this thing being bought up or is it being sold off? Well, you will see that on balance volume or price volume trend will tend to move in the direction as to what's going on. If it's falling while the stock is moving sideways, it's in distribution. And if it's rising while the stock is moving sideways, it's under accumulation, in my opinion. I like to place this indicator right over the price chart because it makes it easier for me to spot divergences. But you can do it however you want. Now we can zoom in on it and see what we got. So new high, new high, new high, new high. It's holding support. Massive new high. I'm going to let this one ride another day because it's a little disconcerting what's going on in here. But this is very bullish. So we'll see. UMH properties. Let's move on. National storage. Okay, so look at this on national storage, right? This formation is very bullish, but we're not going to enter it early. Here's your high on PVT, but the price made a new high. PVT didn't make a new high. So you kind of have a divergence here, but this is a bearish divergence. This is something that makes the stock look a little bit weaker. So in this case, you might hesitate a little bit and say, let me wait for a new high. A lot of this has to do with your personal trading style. But then the other thing you have to remember is the only stocks that are on this watch list are top performers anyway. So what you might be looking at here is this might just be a little bit of a shakeout before we make another high. But if you were watching this stock and you know what, there's only about $1 worth of risk here anyway, right? You could buy 100 shares, $4,700. And you're only risking $100, and this is a pretty good solid setup. So you know what? I'm going to issue a trade alert on this one as soon as I figure out how to get this to work. So there it is. Axon Enterprises. We issued a trade alert on it yesterday. It came down and then it recovered relatively quickly. Today's activity's not looking too great, but we're fine. Vizio Holdings, Front Door. I would kind of like to wait and see this establish a new swing down here. It's very strong through here. TPG, this is another one we issued a trade alert on. Probably want to have your stop loss down around 47 or so. Has not made a new high yet. This is pretty bearish, which is why you want to have your stop loss up here. But if you come over here and you look, right, I know I said this is bearish. I was referring to the price volume trend. But this actual day here, most likely that's a spring. See, we came down, we took out all of this price activity for one day on a huge spike in volume, and then the next day, rally, 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 rally all the way up. So even though your PVT is a little bearish, the actual price activity is bullish. This is an extremely strong chart, which is why I issued the trade alert in the first place, and we bought it early before it made a new high. Now, time will tell, but we have a clearly defined entry point. We have a good place to put a stop loss. So far, it's acting right. So let's leave it alone. That is TPG, Veris Residential. Something happened to my swings. I tried to turn. I want the swings on and the PVT off. Cintas, we issued a trade alert on yesterday. I also did a separate video on it, and it is making a new high. Well, not quite a new high, but it's making a high today. So we have this area here where we cleared the aisles. That is a shakeout. Cintas has I think a 4-for-1 stock split coming up. CTAS. Again, you would have had a trade alert on that one. Subscribers to Stock Strategy Circle get these trade alerts as I place the trades. You don't get any better than that. AvePoint Inc. Right, nice solid breakout. It's consolidating right now. Nothing exciting there today. Highwoods Properties. Here's a minor spring. Why? Why am I calling that a spring? See this huge spike in volume that took out all of this previous support, and then now it is closed up above that. This is a really good entry point on this particular stock. You have 74 cents worth of risk. If you buy 100 shares, right, that's $74. Now, that assumes you have $3,000 to put in. We're going to issue a trade alert on this one because this stock is moving sideways. It has recovered It's, look at that. I just got hosed on the fill. Right. LOL. That's the way it rolls. Anyway, if this thing closes below this area of support, I'm going to sell it. That's a dollar. It's like $1's worth of risk. That's $100, right? Buying one of the most, powerful stocks out there right now, Highwoods Properties. It's interesting. A lot of these REITs have been very bullish. Ameriprise Financial. This one looks like it's putting in an intermediate top, but whatever. We ain't buying it today. Cinmark Holdings. We have a close above the resistance. So that again is another one that is a buy. So we're issuing a buy alert on Cinmark today. So there you go. If you were a member of Stock Strategy Circle, your phone would be buzzing right now. Your stop loss here is going to be down around 26, depending on how many shares you have. This hasn't moved up yet, but you can look at the chart and you can see where the shakeouts took place. So if you get a significant close below 26, you probably want to get out of this one. So you're looking at risking $2 a share, right? It's nothing. Remember, when you're trading stocks as opposed to investing stocks, you want to be in the most powerful stocks when they're showing power, and you want to get out of them when they're showing weakness. Amneal Pharmaceuticals. We haven't set up a new base for this one yet, but it's consistently breaking through the highs. This one does not look near as bullish as the others. Let's move on. Piedmont Office Realty Trust. It's out of its high level box on the downside, has not established a new point of support. Let's move on. Parker Hannifin, nice shakeout. Stopped exactly where you would expect it to do, right? Remember, old resistance becomes new support. There it is. Cohen and Steers, look at this thing. It is out of the box, made a new high. They're talking about how horrible the stock market looks right now. That's all I hear is negativity. Oh, recession this, recession that. We are issuing a buy alert for Cohen Steers because it just popped out of a new consolidation yet today. The market is strong. I don't know. It's strong. Now, maybe if you're trading the wrong stocks, the market looks like hell. Okay, well, trade the winners. If Cohen Steers penetrates this support around 13, then you'd probably look to close it out, right? Okay, so from 1350 to 1403, that's 50 cents risk. Nothing. It's literally nothing. Newmark Group. Here's another one, right? It's making a new high yet again today. One of the things that you need to be able to do is you need to adjust your position size based on how much money you have available in your account to trade. Now, I typically don't risk more than 1 or 2% of my account in any one position, which is why I issue a lot of trade alerts, because I'm not looking to risk a lot of money in any one trade. It used to be a total nightmare to keep track of more than 3 or 4 stocks. It's totally easy today. As I click through this list, the stocks that we're holding in the account that we have positions on, it's there. It just shows you on the screen. It's not that difficult. You can manage, 20, 30 stocks relatively easy, especially if what you're mostly concerned about is the price activity. Notice I'm not looking at their fundamentals. I'm not reading any of their financials. We are not doing investing here. We're doing trading. We're buying the strongest stocks when they show strength, and we're staying in them until they show weakness. Now, it turns out that typically the strongest stocks are the ones with the best actual fundamentals and the best hopes of surviving. That's just kind of the way the market works. Not always, but if this stock shows weakness, I'm going to sell it, so it doesn't matter anyway. This is Newmark Group, MRNK, so there you go. So depending on your account size, you might buy 1 share. You might buy 100 shares. You might buy 42 shares. What you want to figure out when you're putting your positions on is, where am I likely going to make the decision that this stock is no longer going to perform? What price level is that? Well, in my case, I'm thinking that if we get significantly below this line here around 14 or so, right? Remember, old resistance becomes new support. If it penetrates this support with any conviction, I'm going to get out. So what that tells me is I got about $1 worth of risk. So then you determine on your account size where that is. $1 worth of risk, if you have $100 in your account, okay, 1% of risk is $1. You can buy 1 share. If you got $1,000 in your account, you can buy 10 shares, right? Right. That's how it's done. It's all based on how big your account is. Do not pay attention to the number of shares that come across on your trade alerts. Sometimes it'll show that I bought 1. Sometimes it'll show I bought 50. Sometimes it'll show I bought 1,000. That has to do with the risk amount that I'm taking in my account based on all of the other positions I have. I buy stocks for the trade alerts 1 share at a time. Has nothing to do with my conviction. It just has to do with the positions I already have. I'm just trying to get the trade alerts out when I see something that looks good. Okay, where are we? I got lost here. Let's go through. Okay, Cohen and Steers, BlackRock, Cousins Properties. Here's another company with the name Properties in its title. And it is looking bullish here yet again. These properties companies, some of the interesting things about following the stocks that become strong as they become strong is you get to see the rotation in the market, as it occurs. And so there's rotation going on. We're going to issue a buy alert on this one. Look at this. I keep getting hosed on these fills. That's kind of pissing me off. That happens when you buy in, odd small lots, especially when you buy at the market. So it is what it is. Look at this one. Motorola Solutions. Sold off, found its bottom, putting in a base. This is another low risk entry. 429 to 422. This one you could just about buy today. Look at all this strength through here. This thing's a madman. And you know what? I'm going to issue a buy alert on this one too. I mean, this is literally killing me. It's killing me to see all of this activity. And you're not able to take advantage of it because you're at work and you don't have the trade alerts, so you're missing it. But you know what? That's not my problem. So look, on this higher price stock, I didn't get hosed as bad, right? They only hosed me at a 90 cents on the fill. So that's the other thing. When you're trading a more liquid stock, you're going to get a better fill. Westinghouse Air Brake, WAB. This is another one where we might have a really good entry point right here, a really good entry point. So we're sitting right at the point of control, right? It's right at the point of control. Your stop loss is going to be right around 160. So you got $3-4 worth of risk on a leading stock. You have all of this resistance up here. If it breaks through this resistance, this thing's going to be a madman. It's already cleared the aisles once, twice. I don't know why my arrow didn't go up. Twice. Why is this not giving me an arrow? Right here, I just got done saying how great trading. There it is, twice. Is that another aisle clearing just before it takes off? Maybe, we'll see, but that's why we trade with stop losses. I'm not going to issue a trade alert on this one. I might come back to that. Moody's has cleared the aisles. It's not acting strong enough, so I'm not going to go ahead and buy it right here, but waiting until it makes a new high, probably not a bad idea. Look at this. It cleared the aisles. Boom. Moody's, MCO. HCA. So look at this. This is what's called a outside week down. This is typically bearish, okay? Typically, this is like, oh my God, this stock is done for. When you see this formation on a daily chart, that almost always is the end of a move. Now, this is also called a key day, but us old school commodity guys would call this an outside week down. Typically, what you would see on an outside week down is you would have this, or an outside day down, you would have this followed by a quiet day, followed by another leg down almost as the same size. So over a period of about 3 or 4 days, the market makes 2 or 3 huge moves down. Now, remember, we're looking at a list of stocks that are the strongest stocks that are available to trade right now. So what happened with this one? We had our outside week down. We had another day down, but it closed in the middle. And today it's holding up. So it may turn out that this right here is going to be a massive spring. This might be a massive bullish opportunity in this stock. But, okay, we're not going to buy it today because it's not quite acting right. We'll see how it closes. If this one makes a new high, then obviously this was a shakeout. But we're going to give it more time. I'm not going to issue a trade alert on this one because we're just not quite there yet. But this is the kind of stuff you want to be aware of. TransUnion, new high, new high, new high, lower high. This one's in a box. We'll let that one ride. Samsara, look at this one. Here's what I mean. This is why you want to trade the strongest stocks in the market at any given time. See, by doing that, look at this one. Oh my God, it's going to die. And then boom, it pops right back up. When the bias is on your side because you're trading strong stocks to begin with, the upside volatility is in your favor usually. So we might have missed this breakout. Extra space storage. EXR. This one is in a box, has not made a new high. Here's your shakeout. Again, we're seeing the similar pattern over and over again because that's the way the market is manipulated. Okay, so traders, we're all looking at the same price charts. And so what ends up happening is you will have, I guess it doesn't do me any good to point with my finger, does it? You will have all kinds of stop loss orders get packaged right along these obvious levels. And so if you're manipulating a stock to the upside, you want to catch as many of those sell orders as you can before you move the stock up. So what happens is they will push the stock down below these obvious areas, collect up all of these orders, and then let the stock rise. So you will see this kind of activity all the time, over and over and over again. CubeSmart, look at this. We should have issued a buy on this one. I actually have CubeSmart in one of my other deals. I'm going to go ahead and issue a trade alert on CubeSmart. Let's see if I get hosed on this, Phil. Oh, look at that. I got hosed out of 50 cents. Okay, so, wow. I have to start trading with limit orders. That's kind of pissing me off. Okay, so CubeSmart broke out yesterday. It's up again today on strength. Okay, remember, strength follows strength. Where's your stop loss going to be at on this one? 50.84. Depends on how many shares you buy, what your tolerance for risk is. So if this is an obvious level, really you'd want to be down around here somewhere because it would not be unusual at all if CubeSmart were to get weak and then over a day fall down, hit this level, and then turn around and bounce off. Remember, these are volatile stocks. So it depends. But whatever your account size is, you're going to place your trades in accordance with that. So if you feel you can risk $100, right? If you put your stop loss here and you get filled at 52 whatever and you only want to risk $100, you can do about 30 shares. But what you got to realize is that you have to account for market volatility. And so really, should your stop loss be right there? Probably not. Your stop loss probably ought to be somewhere down around here. It actually ought to be below this peak. So now you're risking more like $6 a share. So if you're risking $6 a share, and you only want to risk $100, $100 divided by 6 tells you how many shares to buy. And then you put your stop loss down here. And then if it has a huge day down, you don't have to worry about it because, again, you're only risking the $100. It's the same $100. Now, down here, I created a formula that kind of tells me how many to buy based on volatility, and then I can just plug in a risk amount. I tried to share this with everybody on TradingView, but for whatever reason, TradingView blocked it. I mean, I don't get it. It's a relatively simple formula. It's based on average true range, but we risk $200. And so if I were to risk $200 on this one, it's telling me to buy like 40 shares. So I'll buy 40 shares and then $200 risk. Probably going to put my stop loss down around here somewhere. But don't forget to account for volatility. Maybe putting your stop loss right here is not the right way to do it. There's actually a thing in TradingView called a V-stop. Let's put that on there. Okay. Now, what this does is this gives you an idea of where your stop loss should be in accordance with the volatility of the current stock. Now, remember, before I turned this on, I was saying your stop loss probably ought to be down around here. Well, look at that. That's more or less where the volatility stop is. So if you were to put your stop loss on a close below 49 or so, and you wanted to risk $200 based on today's pricing activity, you'd buy 50 shares, 40 shares. Anyway, let's move on. Sherwin-Williams, again, looks like it's getting ready to make another high. See, these are all strong, powerful stocks. And as a member of Stock Strategy Circle, you're going to have access to this website, into this curated list. I go through the charts on a regular basis, and I add and take things off the list based on based on how strong I think they are. So one of the reasons why there's so many opportunities right now is that we're not looking at the general market. This is not a screenshot of the S&P 500. These are stocks that I have already pre-selected that are exhibiting signs of strength. Look at Aramark. I mean, this thing is a total wild man. Broke out at 36. It's up today. I didn't put a trade alert on this one. I missed it. I'm not going to put a trade alert on it today. We're going to wait for another formation. But when you're in these kinds of stocks, there's always tons of trading activity. DR Horton, I put a trade alert on a couple days ago because it made this little low, had this shakeout, and then it recovered. Has not made a new high yet, so we're going to see on this one. Maybe we'll close it out, but it is holding up, so we're going to let it ride. Okay, so let's say you're trading in a small account, you get a trade alert, and you want to act on it because you check the chart and you're like, oh my God, this one's a no-brainer. I want to get some, right? How do you decide what to close out? So there's two ways to do that. You either close out your position that's showing the biggest monetary loss, or you close out the stock that appears the weakest at the time. Generally speaking, close out the one that has the biggest monetary loss. Look at this. Here is another. We actually traded Iron Mountain before we made money on it. We caught it through here, rode it up into here, and I don't remember where I ended up selling it. But anyway, we did. And so what is going on with Iron Mountain? Is this another aisle clearing before they take it up and make a new high? We'll see. Here's what I would like to see on Iron Mountain. Let's throw a trend line on there. I want to see it close above this line. We got to close above that line. You're pretty rock solid. Now, if you don't want to put that much thought into it, just wait for it to make a new high. Or you can buy it right in here. Based on the $200 risk that I would typically do, this thing's telling me to buy 20 shares. Right? So I could buy 20 shares right here, put my stop loss down below there. And as you can see, this volatility tool tends to catch the trend pretty well, because every stock is different. Some stocks will move 1% a day, some move 10% a day, some move 0.5% a day. So every stock is different. And so your position sizing has to take that into account. If your position sizing does not take into account the volatility of the stock, you're eventually going to get hosed. Brixmor Property Group. Here's another company with the name Property Group. BRX, high level consolidation, another strong comment. CBRE Inc. What's the news media telling you? Oh, commercial real estate. Everybody's going to die. Stay away from commercial real estate. Okay. Right? Meanwhile, CBRE Real Estate Group is up 30% since July. This is why I tell you don't listen to the financial news. All right? It's all smoke and mirrors. It's all baloney. The only thing that matters when you trade stocks is what the price of the stock is doing. You have to figure out by looking at the stock what is going on. Is this under accumulation? Is it under markup? Is it in distribution? You will learn by taking the course when you enroll in the Stock Strategy Circle how to determine this by looking at the chart. Anyway, so look at this. Another spring. Another spring. Right? What makes this a spring? Okay, so look. See this high volume day right here? There's a lot of buying that went into that day. Then the next day, boom, it goes down and it clears the aisles. Okay? What's the difference between a stock whose back is broken and a stock that's just clearing the aisles, getting ready to make new highs? I'm going to tell you the difference. The difference is when a stock penetrates, clears the aisles, and collects up all the buy orders, if it's aisle clearing, the price recovers almost immediately. It's not going to spend more than a day or two down here. The longer time it spends down here, the weaker the stock is. Okay, look at this one. Clears the aisles. Closes slightly below the low. That is not a good sign, by the way. Usually you want it to come down, clear the aisles, and close in the top half of the trading cycle. So this one's a little weak. Closes down. Oh, look what it does the next day. This is Monday. Monday, they buy this thing like crazy, and it's up again today. Right? What's that tell you? That's CBRE. By the way, if you always do the opposite of what the news media tells you, you'll generally do better, right? So there's going to be a commercial real estate collapse. Guess what? So what? It doesn't matter. I don't own commercial real estate. I don't know what this company does. All I know is it's CBRE Group. They do commercial real estate. I know that much. Stock price is going up. That tells me that the people on the inside know something's coming. Now, maybe what's coming is the commercial real estate market is going to totally implode. And because CBRE is a bunch of commercial real estate agents, they're going to make a pile of money, while all these transactions are taking place. I don't know. I don't care. Here's what I know. I know this is an aggressively moving stock, and those are the kind of stocks I want to trade. But we're not going to issue a trade alert on it today. I want to see a little bit more strength in this, but it still looks pretty good. S&P Global, right? Look at this thing. That is called a bull flag. I put these lines on here before it broke out, but you don't know that because you're not a member of Stock Strategy Circle, so you didn't get that memo. There's no formation on here yet, but look how strong that is, right? Simon Property Group. Simon Property Group is selling off. Remember, old resistance becomes new support. Look at this. Came right down. Here is the old resistance. Penetrated, closed up. This may turn into some tradable activity. I don't think it is today, not for us. Intuitive Surgical, bought this one back here, sold it somewhere in there. Maybe we have another thing going on. Hey, notice, same deal. There's almost never a penetration of this volume trend. That's why we use it. We're not there on Intuitive Surgical yet. Edison International, another massively strong stock. eBay just peaked up above. Now, they do aisle clearing in the other direction too, right? So let's say you have a stock that has a huge spike up, closes down, and then the next day shows weakness. Now, that may be a sign that you're getting ready to enter the distribution phase. And when they do that, that's because they know there's a lot of buy orders right here. So they want to push the price up, collect up those buy orders before they move the stock down. So when you see a stock that penetrates a level where you would expect there to be a lot of buy orders, and then it closes down after that, that's actually a sign of weakness. So that's interesting. We're not going to jump on eBay because I just don't like the way it looks, even though it did make that little high. Annaly Capital Management, look at this thing. This thing is a madman, right? It's all over the friggin' place. If you were to trade something as noisy as that, probably you should trade it on a weekly chart, because if you try to trade this on a daily chart, you're going to end up getting stopped out. Or your position size is going to be too big for the volatility in this particular stock. But if you click it out to, let's say, a 3-day chart, suddenly you can get a little bit clearer view of what is actually going on. Look at all this resistance right here. Massive amount of resistance at the $20 level. Currently, the stock is holding up above its point of control. So it's above the point of control. It has a huge base. Huge base. Look at this thing. I mean, this base goes on for shakeout. This base goes all the way back to October of 22. So you're in a base for almost a year. Nice swoop down, nice penetration, nice aisle clearing here. It's above support. Excuse me. What do we do with this one? You got to close above that level there and a pullback where it touches it. And this one's probably going to be off to the races. This thing is building a lot of strength. It's got some issues, right? Here's a stock with, is that a broken back? Well, look what it did, right? That's not really a broken back. That was tradable. Anyway, that's a 3-day chart. Let's look at a weekly. Okay, here's the weekly. Now, when you trade off of a weekly chart, you're going to take a smaller position. This thing's telling me that I can get 60 shares, and my stop loss is going to be somewhere down here. We get to close below 18 on 60 shares. Let's see what happens on a daily chart. Well, interestingly enough, the opposite happened. It's telling me to buy 205 shares, but it's going to have my stop loss at 1950 instead of way down here. Now, frankly, if you put your stop loss at 1950 on a chart like this, you're out of your friggin' mind, because this thing is just too noisy. I mean, you got to have enough sense to be able to look at the chart and try to figure out, what is most likely to happen. Now, we do have a little bit of a change of character going on in here, right? See how noisy we are through here? And then we get this nice tight consolidation pattern. This is NLY, Annaly Capital. This might be a safe trade with a stop loss right here. I mean, remember, we're not marrying these stocks. We're only dating them a while, and $200 is $200. I still want to see it. I still want to see some strength, through here. This looks like massive support right in here, though. I mean, it really does. I am so tempted to buy this right now. I'm not going to do it. Fidelity National Information Services, right? Forming a box. Nothing else to say there other than look at its past performance. 3M. 3M's looking weak right here. See, it penetrated through. Next day, we had a consolidation. It didn't make a new low, but look at this. Lower highs, higher lows. Too early to make a decision on this one. It's holding up above the support. That doesn't mean it's not going to penetrate. We're going to leave it on the list, but let's move on. Nothing to talk about there. Here's another key day. This is an outside week down, but what happened the next day? This is for ICE, Intercontinental Exchange. It more or less recovered and has gone into a sideways channel. So this is one that you'd buy if it makes a new high. If it makes a new low, it's probably not going to go much lower than here. Look at that nice strong trend. I think we're almost done with the watch list. Blackstone, volatile, right? Boom, 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 all over the place. Let's take a look at it on a 3-day chart. On a 3-day chart, what do you see, right? Head and shoulders bottom, breakout, box consolidation, right? There's your box. We broke out of the box. We recovered the box. And now we're in a couple more boxes. See, if you had some money you wanted to park and you were willing to run your stop loss down here, right? And then your time horizon was, let's say, a year, okay? It's highly unlikely that this thing is going to come back down. This is an extremely powerful chart. Extremely powerful chart. I might do a separate video on this one because this is something that would be good for probably a long-term investor. Based off of the weekly chart, if you put this on a daily chart, it's so volatile, you're likely to get stopped out, right? It's all over the place. I mean, you're going to have your stop loss down here, but and that's not bad because it's already cleared the aisles. Cleared the aisle once, consolidated. Probably you'd have your stop loss right in here, right below the point of control. This is a very powerful chart. Blackstone Inc., BX. Hopefully I remember to come back and do another video on that. Bank of New York Mellon, right? Little consolidation, popped up, had a nice little run. Now it's going back. It's going to kiss this support. Remember, old resistance becomes new support. We're going to see what's going to happen with it. This is bearish activity, so we ain't buying that one today. Let's move on. AGNC Investment Corp. Here's another one that, like Annaly Capital Management, has a huge base. Look at this shakeout, followed by another massive shakeout. Now, why am I calling these shakeouts and not, oh my God, this stock is dead? Look, it makes the low and then it rallies. It makes the low and then it rallies. The lows don't hold. So what you have here is panic selling. Oh my God, I gotta get out. Oh, too many people got out. Oh my God, I gotta get out. Oh, too many people got out. Now what are we doing? We've been moving sideways since January, above the point of control. Look at all of this volume in here. We're trading above the point of control, okay? This stock's under accumulation. Even this, believe it or not, that's accumulation, right? Well, wait a minute. Why is that accumulation? Because they manipulate the market down to get everybody to panic sell out. That's the whole point. And then they collect up all the orders and then they consolidate before the markup phase. This is accumulation. There's no question in my mind that this is accumulation. Look at this increase in volume on the breakout. Then you have a shakeout followed by a base. This is almost exactly what I talk about in the course, which if you were a member of the Stock Strategy Circle, you would have access to the course and you would know all of that. I'm going to buy this today. No, and I'm going to tell you why. It's so volatile. This is another one that you're going to want to trade off of the weekly chart. So you'd have your stop loss. You know, if you get a close below $9, or in this case, probably, $9 or so, you get a close below $9, you might get out. This thing is so prone to shake. Boom, boom, boom. Big volume on the break. This would be one where you would just park some money in, you know, and see what it's going to do. This looks really, really bullish, right? Now, would I put $100,000 in this if I had $1 million account? No, I wouldn't. So another way to think about your risk, right? If you see something that like this, where you're like, man, this thing is pretty volatile, but I don't want to risk a ton, but I also don't want to get shook out. Okay, so let's say you got a 100,000 account. You don't want to risk more than 2%. $2,000 is 2% of 100,000. You could put $2,000 in this stock and then forget about it. That's all your risk. Then don't look at it. Come back in a year and see what it did. Now, let me tell you something. If this turns out to be a 10 bagger, right, you're going to get 10 times your $2,000, you know, regardless. Well, let's say you got $1,000 account and you want to put in 2%, right? Well, just adjust it accordingly. So instead of buying, a couple hundred shares, you might buy 10 shares and you leave it in there. It's all based on percentages, right? You might be the best trader in the world. Here's something to consider, right? You might be the best trader in the world. Let's say you start off with $1,000 account, and 4 years later, you've taken that $1,000 account and now you got 10 grand in there after 4 years. You have just outperformed every professional investor on the market, but nobody knows who you are because you don't have any money. So don't get discouraged because of that. Just keep doing it, right? Keep doing it. Keep doing it. Keep putting more money in. It's all based on the percentages. You have to manage the risk, and you have to not trade when you're off the market. If you look at a chart and you can't tell right away whether it's an accumulation, distribution, markup, markdown, if you look at that and you can't be like, oh my God, that's accumulation, don't trade it. Trade the ones that are obvious, right? There's 15,000 stocks available to invest in the United States. I'm only looking at 60 of them. 67 of them is on the list. Why? Because I try to find the stuff that's obvious. I'm not trying to do anything, super genius here. We just look for the obvious. Now, it's obvious to me on a daily chart that this thing is crazy. Now, granted, these are small movements. 1060 to 950, that's $1, right? Whoop-de-doo. Really, the way to trade this thing would just be to throw some money in it, forget about it, come back and look at it in a year, see what it's done. I may do that. I might need to set up a whole new trade alert for set them and forget them, Just set it and forget it. Okay, let's move on. We spent way too much time talking about this one. Carrier Global, shakeout. Look at this. It stopped right above the this. Here's a few times where it penetrated, right? So Carrier is like super, super volatile. Oracle Corporation. Oh, look at that. Boom. You know what's funny about that? I was going to buy Oracle the other day and I didn't. So this is the whole point. When you trade the strongest stocks, they're the strongest stocks because they are the strongest stocks. Notice there's a little arrow here. That means I looked at this before. I thought, oh, look at that. There's a spring there. This one went into a tight consolidation. You see that box? See that little box? See, I drew that before. Of course, it doesn't matter because trade it. So there you go. Palantir Technologies. Look, another one on the list, made a new high today. I might issue a trade alert on that in a couple days. Let me show you what I'm talking about here. We're going to go into, am I still recording? I don't even know if this thing's recording. Let's go into the stock strategy circle. Webmaster. This is it? No, this is it. So here's the trade alerts, right? Bought 1 cube. If you click this link, it takes you right to CubeSmart on TradeView. And then you can look at the chart or whatever. If you have a brokerage account with one of these brokers, you can trade it right off this chart. I mean, it's fabulous. TradeStation to my system, the way I have it set up just for your convenience. So if you download this app into your phone, when these trade alerts get issued, your phone is going to buzz if you have it turned on. If you don't have it turned on, well, that's your fault, but it'll update. And then if you like doing your own research, but you want a little bit of help to figure out, what's hot, what's worth looking at, you can come in here. And then whenever I update my watch list, so this watch list was updated on September 9th, it has the same thing. I put up a link. There's all the stocks that we just went through. And then if you click this, it'll pull you right into TradingView, right into the same watch list that we were on. And then you can bring up the charts, you can save the watch list, you can do whatever you want with it. You can look at each one of these things individually on your own. So it's a pretty good system. Now, if you're too cheap to invest in your own growth, well, that's fine. I actually have a section down here for cheapskates. Cheapskates get access to some things, but not all. But you can still get in here and you can still participate in the group. Like these are links to like the various videos I put up. All of them go in there. Sometimes I do long form videos. So there you go. All right. This has been Painless Trader with Stock Strategy Circle. Out.